and no prizes. So guessing that she has a lot on her plate today, aluminium as well as sugar.
Oh, well, absolutely. Let's start with the aluminum prices first. And what a gain that we've seen in the last couple of weeks onto that one, 25% up if you don't count yesterday. But yesterday overnight, we have seen prices come down by nearly 6 to 7%. At one point in time, it was down 8.5% as well. So that's the kind of volatility that we have seen come in for that metal. Well, of course, the gains were coming in on the back of U.S. sanctions on Russia and Rusal. And Rusal produces nearly 6 to 7% of the global aluminum. And then, of course, we did see statements coming in from LME and CME on how they have restricted the supplies from Rusal. And then, of course, following that, there was force majeure also declared from Glencore and Rio Tinto on some of those aluminum supplies. So plenty has happened in aluminum. But now with the U.S. coming out and saying that they are giving a wider window to the companies to wind up their businesses with Rusal is something that really seems to have worked in favor. And we have seen the Rusal stock go up by 30% overnight, and the aluminum prices have declined quite sharply. Even today in the Asian markets, as you can see, 0.5% down onto that one. But joining us then is Peter McGuire, who is CEO at Exim Australia, and he joins us to talk about aluminum and other commodities as well. Peter, hi, thank you so much for joining us. First of all, let's start with crude oil prices though, because we are trading at a new 3.5-year highs onto that one, and there are various reports on suggesting on how $80 could be a possibility soon. What is your sense? How soon can we see 80 and how sustainable would that be?
I wouldn't be surprised to be close to that number by the next OPEC meeting, which is 2 months away in Vienna. It just seems to be, a number that OPEC are certainly considering. That meeting in Jeddah over the week, last Friday, they're mooting that sort of number. They're saying, the 80 to 85 for Brent. It's edging higher. And at the present time, you'd have to be, I suppose, more bullish from a trading perspective. And it's considerable what the rig count's going to be over the next couple of weeks and months in the US, because, higher prices is going to bring all of the guys back to the market. And I think they'll be producing at record numbers going forward in the next, over the next 3 to 6 months from a US side. So let's just see what happens in the next, 6 to 8 weeks. But at the moment, yes, higher and possibly 80, 82, 83.
Well, aluminum is something that has been buzzing quite a bit. And what is your sense on that? Because the kind of back and forth that we have seen US do in sense of sanctions, in sense of trade relations, etc., with various countries seems to have impacted a lot of metals, especially aluminum. How would you want to look at the ranges there?
I've read the articles and I'm across the news side of it, and that big spike the other day of around about up 9% was nothing short of breathtaking, and it took a number of the other metals up with it. And then overnight you go to sleep and you wake up and you see a move to the downside of 6 or 7%, and there's talk that maybe they won't be absorbed and they may not be as hard from those sanctions from the US side, and Trump may back off on them a little bit. It just seems to be so many conflicting points, and it's a little bit like the Chinese, the tariff situation. They're gangbusters to start with the US and, and what they wanted to achieve, and that's also, rolled across to the aluminium and base metal markets. So it just seems to be a level of confusion out there, and that creates, I suppose, the volatility in the market and the trading conditions. So at the present, you would have to say that, if they're backing off on them a little bit, there's probably further downside for a lot of those metal markets.
Point taken. Peter, as you pointed out, the U.S. really seems to be creating a lot of volatility. There have been lots of events there. Would you say that U.S. clearly is in the eye of the storm, whether we're looking at Syria or Iran or Russia or even China for that matter? So when you look at the global markets, what is it that you would be following as we see in sense of fundamentals?
This seems to be the modus operandi of President Trump. He's across all points of the compass, and he creates uncertainty via Twitter, And that seems to be the way that the market absorbs his point of view or consideration on something, and it creates again that, you know, the volatility. Have a look, but in some ways you've got to say he's a deal maker, because this could be the first time you're talking about, let's look at North Korea. Within the next few weeks he may be meeting their leader somewhere, either in Switzerland or Sweden, I see. And that's the first time that this has ever happened. So he does make things happen. China was certainly on the back foot when it came to those, you know, as far as tariffs. They retaliated, and now there could be some sort of, you know, negotiations moving forward. You know, the oil situation's the same. He's certainly not scared of confrontation. And in a true entrepreneurial fashion, that seems to be the way that most entrepreneurs, you know, deal in everyday life. They're confrontationists, they look for opportunity, and they create confusion to the other side and then come back to negotiate a path forward. So probably we've just got to get used to, that's the way that he operates, and we've got a few more years of it yet. If he gets re-elected, you've got another 6 years, so, or 6.5. Going to be a volatile time, that's what I'm going to say. Volatility's here to stay.
Yeah. Peter, one word on the currency as well, because the currency play also seems to be working its way in case of commodities. And while, of course, we started this year, the first quarter, with a weak US dollar, the last couple of sessions perhaps have been positive. We are trading at 2-week highs when it comes to the US dollar. What is that you're watching on that?
Gee, it's a hard one to pick. You know, if you're looking at a chart from a fundamental side, you'd probably say it should edge higher with, you know, possibility of further rate hikes. You know, you might see a 92 handle for the US dollar index. It was, I would say it was oversold, and that's no doubt over the last month when you look at it. And it's rallied very strongly to the upside in the last, you know, 4 to 6 weeks. So I would say that you've probably got momentum on its side, and it'll continue. If you get a rate hike in the next, you know, 1 to 2 months, it'll edge up higher from there, and bond yields will go up, and it'll just be, you know, game on for the US dollar.
All right, Peter, really appreciate you joining us and answering all our questions. So some more strength continuing for crude oil prices and some more profit taking for the metals as a space is what he really seems to be thinking.